right to Tom Lee, though, as stocks hit new record highs yet again. There you go. Green across the board on this final trading day of the week. Tom, are you there?
Yeah, I'm here, Scott.
All right. It's good to see you, too. When you were on with us a month ago, you downgraded the financials. You double upgraded the FANG stocks. It was a great call. You're reversing it today. Why?
Thanks. Central to that view a month ago was the idea that consensus was expecting rates to push too high. In other words, we thought actual rates would undershoot. Had to do with the idea that inflation expectations were coming down and GDP growth wasn't necessarily accelerating. Now we've, I think, had a growth scare that really peaked yesterday. I think the headline might have been the Tokyo Olympics, but that really pushed the 10-year down to 125. And now we think the conditions are set for interest rates to shoot above consensus expectations. In other words, we think rates are drifting higher. That's going to lift basically the entire epicenter complex, which has moved in lockstep with interest rates.
Okay. So I hear you. Okay. The problem I have with this call today, Tom, is that you yourself say your conviction is only 60%. I'm wondering, why make a call like that and go public with it if your conviction is only 60%?
Yeah, that's correct. Number one, we can only be 100% sure in the rearview mirror. So I can only be 100% sure a month from now. But the reason we think 60% is a really good change is, number one, the 10-year yield did bounce off the 200-day. That was an important level to hold. Second, we're pretty confident that there's a lot of pent-up demand, revenge consumer spending, and CapEx, which means GDP growth will be strong. And we know the Fed's going to be supportive. So the idea now that people think rates could undershoot makes us think you want to counter trade that. And again, 60% is, I think, adequate to make a reversal. You're right. It's a big change to be based on only 60% knowledge. But, I didn't really want to wait any longer. We sent it out as an intraday because we just felt that was the moment to send out the notice.
Okay, I understand. Better to be early, right? In your mind, I guess that's how you're thinking of it. You just said that there's a lot of consumer demand. You know what else there's a lot of, Tom? There's a lot of liquidity, right?
Yes.
So
Correct.
why do you think rates are going to go up from here if they've come down so far from their peak?
Yeah, Scott, that's a great question. I think three things drive interest rate change. One is growth expectations versus consensus, and the second is inflation expectations versus consensus. And the third is sort of what you call like interest rate VIX, the risk of future changes. And I think that there has been a fall in the 5-year break-evens, which is why inflation expectations come down, but that's stabilized. I actually think it could start to rise because, again, there is all that liquidity you're talking about. And on the GDP side, even though we've got the Delta variant and people think that poses growth risk, that's what I think is getting priced in now. So I think once we're through the Delta variant scare, which could take several weeks, growth expectations will actually be edging up, and that should push rates higher. So you're right. I think there's a lot of liquidity, but it may go more into equities because it has been really scary to watch the 10-year fall to 125. I mean, it's been disturbing.
It has. I'm just wondering if you look at let's just say the market action today specifically, I'm kind of hard pressed to believe that this tech move that we've seen in the last few weeks is going to reverse itself anytime soon and all of a sudden go back into the epicenter names, right? Once these big FANG Plus stocks have gotten a bid, I mean, the trend is your friend, and there is momentum behind a lot of these names. Apple being the latest stock in that group to hit a new high, which it just did today. You know yourself, once these things get going a bit, it's hard to break that track.
Correct. I'm with you on that, Scott. I think FANG is going to detach itself from interest rates, meaning they're going to have a great second half, not because rates are going to fall, but because these are great companies that almost did nothing in the first half. So we think if the S&P ends the year up 25, and a lot of these FANGs are up 5-6%, they could be up 20% in the second half. That makes them an overweight. That's why we still want to own FANG, even though we think there's an explosive rally in epicenter coming.
Wow. Let's get the gang involved in this conversation if we could, Tom. Farmer Jim, you're up first. You got something for Tom Lee?
Yeah, well, I'm going to play off of this Apple commentary, the discussion you guys were just having, because, it's up 20% in 3 months. And when it was back at 120, it was in correction territory. That was the time you were supposed to load up. And I look at the reflation trade right now, and whole swaths of it have corrected or more than corrected, right? Look at the airlines. Those are off more than 10%. The financials across the board more than 10%. Isn't this a time that, and Tom, you've been so on this that I think I know your answer. Aren't you just supposed to say, all right, we've been going through rolling corrections. We're going to get rolling corrections. Fine, I'll stay with Apple. It sets a new high. It keeps going. But aren't you supposed to pivot to what has corrected recently, namely the reflation trade, and just get big in it?
That's right. If I was putting on a tactical hat and said, okay, well, where is your chance to have really big positive surprise? It's really in groups that have corrected, as you pointed out. And I was looking at everything from the industrials to the financials to the materials to energy. These have had massively deep, scary corrections. It seemed to have moved in lockstep with interest rates. But again, many of these groups found support at the 100-day, and they're still in uptrends, especially groups like energy. So I think that as a tactical matter, if you're at the bottom end of a channel and you're in an uptrend, these are things that could move 10, even 20% in a month.
He wants you to hold his hand, Tom, and make him feel better about his financials trade. The one that he had so much conviction about yesterday, was fighting back with me about. He thinks those stocks are going to do so well, even in a low-rate environment. That's what this is about. I'm cutting right through
Scotty,
the you-know-what to the heart of his question.
Well, Scotty, I know it's just an oversight on your part that you're not congratulating me on Apple and loading up on that in March. And I know that you will come around by the end of the show and say what Jimmy has been saying in the last few days about financials is eerily reminiscent about what he was saying about Apple 3 months ago. I love you, Judge. I love you.
All right, Tom Lee, I know you were trying to say something.
Oh, I was just saying, yeah, I think financials keep up with the market. I mean, some of these are really blue chip businesses now. They've really managed through what would have been an extinction event last year, and they came out with great balance sheets. I mean, that's true of basically most of the S&P. These are unkillable companies. Their multiples will re-rate, and I think maybe in July we get a a broadening of the market participation. That's a risk on. I mean, I think VIX is really the thing I'm watching, but it could be a risk on period.
Interesting.